My name is Tony Zhang. I am the Chief Strategist here at Options Play. And today we're going to be talking about how to gain your directional edge using Options Play. And I think this is pretty important for everyone because of the fact that, we've had a pretty crazy day out there. The market's down a few of 400 or 500 points on the Dow, 40 points on the S&P. So it's really important for us to have an idea as far as how do we gauge direction on the stocks that we're trading, whether you're trading stocks or whether you're trading options. Everything starts with first gauging where we think a stock is going to be headed. It helps you determine whether you want to get into a stock and, more importantly, decide whether you want to get out of a trade. So what we really want to talk about is how you can use the indicators that are available to you on Options Play to quickly decipher a reliable view on where the stock might be headed. This is, again, for those of you that are trading stocks or options, whether you're new to this type of trading or you've been trading for a long time, these indicators can be used to help you determine or gauge the direction of an underlying stock. So the webinar itself is recorded, so you'll receive both the video recording after the fact so that you can review the material that we're talking about. I will also send you guys the slides so that you can take a look at the presentation while you watch the recording. And I'm going to spend about 10 minutes or 10 to 15 minutes going through the slides, teaching you how to use the indicators that we have on our platform to gauge direction. But what I really want to do is spend the time on the actual platform going through some real stocks and real examples to show you how you can utilize our indicators to gain a directional edge for your trading. Okay, so let's go ahead and get started here. So today we're going to talk about number one, and what I really want to cover is a top-down approach. I want to go over what that is and how you can utilize that when you're choosing what stocks to trade. It's really important to understand the top-down approach because it gives you the ability to create high probability setups, and that's what we're all looking for. Then we're going to talk about how you can gauge your directional view using the trend and relative strength indicators that are available to you on Options Play. Then we'll talk about what is the methodology to take these two indicators to gain your directional edge. And lastly, we're going to go through some bullish and bearish examples to show you what are the different classic setups that we typically look for both bullish and bearish examples. And then, like I said, what I really want to do is spend the time on the platform to show you how to utilize what we've learned or what we use for trading and apply it to some real stocks for you to take a look at. So let's just get started real quick. Again, this doesn't require any previous options knowledge for you to follow along. If you trade stocks or options, this is going to be useful for you. I just want to talk about kind of researching the underlying stock today. I will touch up at the very end as to how you can utilize options to trade the ideas that we're talking about, but today's focus is going to be more so on researching the underlying stock. So what we do here at Options Play, and for those of you that are subscribers or have followed us with the daily plays that we send out, which are trade ideas that we send out every day, we take a top-down approach to finding those stocks that we send to you every day. And what a top-down approach is actually really simple. It means we take a look at the overall market first. We look at the sentiment of the market. Is the market in a bullish or bearish phase? Then we look at sector analysis. So we look at how are the sectors doing within each, across the sectors, which sectors are strong, which sectors are weak, before we start picking individual stocks. And essentially it follows two different I could say paths, if you will, for high probability setups. So for bullish ideas, what we're really looking for is, number one, are we in a bullish market? If we are, then what we want to scan for is strong or bullish sectors. And then once we find the bullish and strong sectors, then we look for the strong and bullish stocks within those sectors. So this is what we call top-down approach, where we look at the overall market first, then look at the individual sectors, then try to find individual stocks within those sectors to look for. And we're looking for bullish ideas. We look for strong market or bullish market. We look for the strong sectors within that market. Then we look at the strong stocks within that sector. That gives us the highest probability of a stock continuing to move higher. Conversely, on the bearish side, what we look for, number one, is a market that's in a bearish phase. So that might be where we're starting. As of today, it's hard to call it a trend, a bearish trend just on one day's price action. But if this continues for the next few days, I think we can certainly maybe call this market starting to turn bearish. If that's the case, what we look for is weak or bearish sectors. So we look at which sectors are weak, which sectors are underperforming the overall market. Then we try to scan for weak stocks or bearish stocks within those individual sectors. And that will give us a list of stocks that may have the highest probability of moving lower. So understanding this top-down approach is important because it gives you the highest probability of searching for bullish stocks that most likely will head higher and bearish stocks that will most likely head lower. Now, this is not the only approach. This is not to say that this is necessarily the best approach. This is the approach that we use. This is the approach that, you can see the results of our daily play. We have two out of three trades that we make are winners based on this type of approach. So we are, fairly comfortable with using this, and it's something that you can easily use with our platform, with the indicators that are provided to you today, and that's what we're going to go through today. So in this slide, I talk about finding bullish stocks or strong stocks or weak stocks or bearish stocks. So let's go about understanding how do I define a strong sector or bullish sector or weak sector or bearish stock, okay? So there's really two primary indicators that we use, trend and relative strength. These two indicators alone give us the data that we need to get a feel for where the stock is going to be headed. And I'll go through details, some real examples of this, but I just want to talk a little bit about what is trend analysis and what is relative strength. So trend analysis is pretty simple. It's predicting the future direction of a stock based on the past data or based on historical data. So these, there's many different ways to do this, but some of the more common ones, or ones that most of you may have heard of, is things like moving averages, trend lines, and channels, because this gives you an idea as far as where the stock is trending, because things tend to follow trends until they don't. So it's really important to understand where is the current trend, both on a short and long term, so that you can quickly gauge whether the stock is currently trending higher, trending lower, or maybe not moving anywhere at all, or perhaps even reversing trends. So that's why trend analysis is important, and I'll show you what indicators we use to help you determine that. Second is relative strength. This is an important concept to understand. What we're simply doing is we're comparing the performance of a stock to the overall market. And this can be done in a variety of different ways, but the simplest way is just simple arithmetic, is taking the stock price and dividing it by an index, like, for example, the S&P 500 or the Dow Jones Industrial Index, and see how that changes over time. Just that simple arithmetic will allow you to understand, is the stock outperforming the overall market or is it underperforming the overall market? There are lots of different ways to do this. There are much more complicated ranking scores, such as Stock School's technical rank, Zacks rank, Morningstar's rank. These are all different ranking mechanisms that allow you to understand how strong a stock is compared to the overall market. Now, we use our own proprietary version of this, and we'll show you that in 1 second. But the concept of relative strength is really simple. If a stock is outperforming the market, these are the type of stocks that institutional investors are more likely to add to their portfolio because they need to beat their benchmarks. And their benchmarks many times are indices like the S&P 500 or the Dow Jones. So in order to beat their benchmark, they need to buy stocks that are outperforming the benchmark. And if they have stocks in their portfolios that's underperforming their benchmark, they're more likely to let those go and sell those stocks. So that's why stocks that have strong relative strength tend to continue going higher, and stocks with low relative strength tend to continue going lower. So what we're going to show you in the next slide is how you can put these two in conjunction with each other to very quickly gauge your directional view. So how do you actually gain a directional edge? And the answer is just simply applying a consistent and methodical application of trend and relative strength. So the trend indicator, which you can see on our application, is in two places. When you type in any stock and options play, you'll see a 1 month and 6 month trend indicator on the upper right-hand corner. That tells you what the current snapshot short-term and long-term trend is. But you also have a graph underneath your historical chart that shows you how that trend indicator has changed over time. So you can see how the trend here in This is on Micron in late January, early February. The trend quality was extremely choppy. The 6-month trend was neutral. The 1-month trend was flipping between bullish and bearish until here in mid-February, both the 1-month and 6-month trend turned bullish. So not only can you see how the current trend is, but you can also see how it's performed historically and how long a stock has been in a trend for. The shorter the time that the stock's been in that trend for, the more likely it might continue going higher. The longer it's been in the trend for, the less likely it may continue going higher. So those are some of the things to look out for. Not only do you want to know what the current trend is, you want to know how long it's been in that trend. And that's what our application tells you is both of those. And the trend analysis is very simple. It'll give you essentially bullish, bearish, or neutral readings. So you get a feel for, is this stock heading in what direction over what period of time? Next, we look at relative strength. That's the technical score that you see right above your chart. So here on MU, the technical score is 10. It's very strong. The technical score will range from 1 to 10. So it's very simple. 1 is the weakest stocks in the market. 10 are the strongest stocks in the market. That's it. It's a quantifiable way so you can very quickly compare any stock next to each other and know which stocks are strong, which stocks are weak. 10 are the strongest, 1 are the weakest. Okay, so very, very simple. 2 things that you want to remember: trend analysis and relative strength. So let's take a look at some examples now. What I want to point out is 4 main categories that you'll see for most stocks. And when you set up a watch list using Options Play, I'll show you how you can instantly determine whether a stock falls into one of these 4 categories. So I'm going to cover the first 2, strong bullish and strong bearish, because these are fairly easy to understand. So a strong bullish stock is essentially a stock with strong relative strength and bullish trends. So both the relative strength is telling you this is a strong stock, this is a stock that's outperforming the overall market, and the trends are bullish. So pretty easy to understand. This is your classic trend following type trade where everything is lining up. It's a strong stock, trends are bullish, it's more likely to continue going higher. Strong bearish is just basically the exact opposite. This is a stock with weak relative strength, so a stock that's underperforming the overall market, underperforming its benchmark, and the trends are bearish. So everything pointing towards the stock potentially moving lower. So these 2 are pretty straightforward. This is the type of trading that you would do if you're a trend follower, meaning you tend to follow the trends. And these are the types of setups that we use for our daily plays. We try to find strong stocks in strong sectors in bullish trends, and weak stocks in weak sectors with bearish trends. These are the types of clear directional trades that we typically like to look for. But I do want to point out 2 other ones, because not everyone trades the same way we do. Many of you might like to be contrarian traders, and I like to call this people who pick tops and bottoms, right? So how do you pick a top or a bottom? How do you reliably gauge that a stock has topped or has bottomed? So we take a look at bullish turnaround. This is for those of you that like to pick bottoms. You can find this by finding stocks that have weak relative strength, so a stock that has underperformed the overall market, but the trends have turned bullish, okay? And we'll go through some real-life examples of this using our platform to show you how to illustrate this. But most importantly, what I want to do is show you how our watch list allows you to identify a stock instantly by looking at these different patterns. Lastly, bearish turnaround. This is for those of you that like to pick market tops or stocks that have topped. This is where we have strong relative strength, but the trends have turned bearish. So this is very straightforward, a stock that has outperformed the overall market, very strong stock, but the trends have started to turn bearish. So for those of you that are stock investors and maybe you own a stock, and when you see a stock start to exhibit these bearish turnaround signs, that might be a time to consider getting out of that stock, taking profit, or potentially hedging your stock that you own. And if you identify a stock that's hitting a bullish turnaround, that might be a time to get into a long-term investment in the stock, because now you feel that the stock has bottomed and you think it's going to continue rising now going forward. These are the types of signals that you can use, whether you're a stock or options trader, using our platform to quickly derive when it might be time to get in and out of a trade. So with that, what I really want to do is just spend the time showing you guys some real examples on Options Play. The market is down 40 points on the S&P 500, so very good day to potentially take a look at some of these things. So what I've done here is I've set up a watch list of a few different examples, and I just want to walk you through each one so you get a very clear view of how to set up your watch list so that within a few seconds you can identify which stocks might be bullish stocks, which stocks might be bearish stocks, and which ones might be starting to turn around, whether they're topping or bottoming very quickly just by looking at your watch list. So let's just start. I've sorted my watch list based on the score, which is the relative strength indicator. That's usually how I like to start my day because it gives me an idea as far as what stocks are strong, what stocks are weak. And when you click on the watch list, first thing you're going to get is these spider sectors. So you want to understand which sectors are strong, which sectors are weak. So it's very easy to see that real estate, consumer staples, and utilities are the weak stocks. The strong stocks or the strong sectors are technology, financials, consumer discretionary. So this helps you set up the day to understand which sectors are strong, which sectors are weak. So depending on if you're looking for bullish and bearish stocks, you want to focus your time on these three sectors so that you can quickly identify high probability setups. So let's take a look at my watch list here that I've set up. Like I said, I like to sort my watch list by score because it allows me to very quickly quantify which stocks are strong, which stocks are weak. So let's take a look at stocks like Micron. This is the one that I just showed you before. As you can see, it's got a technical score of 10, so very strong relative strength, telling me this is a stock that's outperforming the overall market. The 1 month and 6 month trends are bullish. So everything is pointing towards this stock continuing higher. The only thing I will say is that this stock has had a crazy of a run since mid-February. So I would be a little cautious to get in at this stage. It might be a little late, but this is an example of a stock that's very strong and may continue going higher because it's got very strong relative strength and the trends are bullish. Same thing for Macy's. This is the same thing as you can see here in late February. It turned bullish, broke above this resistance level, which is certainly another bullish, you could say, feature of this particular stock. The technical score of 9 telling me this is a strong stock, outperforming the overall market, and the 1 month and 6 month trends are bullish. Just trading near this support level, so depending on kind of how you like to trade, this might be an interesting time to get in because of the good risk reward that you get. But this allows you just very quickly type in any stock and see that, stocks that have a high score and green across the board, as you can see on Macy's, Micron, and Adobe. This clearly shows me these are bullish stocks that have the high likelihood of continuing going higher. And these are all stocks in relatively strong sectors, consumer discretionary and 2 technology stocks here. Okay, so very quickly identify from your watch list when you sort by score, just look at the colors. If it's all green and a high score, that these are strong bullish stocks. Conversely, on the other end of the spectrum, the ones with the weak, lowest scores and red across the board, these are the weak stocks. These are the bearish stocks. So General Electric, technical score of 1, telling me this is one of the weakest, worst performing stocks in the market. 1 month and 6 month trends are bearish. It's continued to be bearish since late January when it was trading around $17. Does continue its slide down to 14. Still doesn't seem to have an end in sight. These are the types of bearish stocks that you might be looking for. Philip Morris, same thing. Weak stock, score of 3, telling me this is underperforming the overall market. 1 month and 6 month trends are bearish. This is an interesting one because it just started being bearish just a few days ago. So these are the types of setups that you might want to be looking out for if you're trying to get into a short. Okay, so taking a look at this type of trade, this is a stock that may be headed back down to this 97, 98 support level down here. Interesting types of setups. So this is where you can use your watch list, type in the stocks that you're interested in following, or even if you're just using one of our pre-built watch lists. So if you're looking at our pre-built watch list, you can very quickly take a look at an individual sector, see which stocks are strong, which stocks are weak, and use the exact same methodology to try to find the types of setups that I'm showing you guys here today. Let's just go back to my watch list real quick. So now that I've shown you a few examples of what I call strong bullish and strong bearish stocks, meaning stocks that are kind of strong relative strength with bullish trends, which are the bullish stocks, and the weak relative strength and the bearish trends. Now let's take a look at ones that are kind of in the middle or maybe starting to turn around. So let's take a look at Michael Kors here. It's got a score of 9. And before I even click on it, I can see that I don't have the green arrows like I have with Macy's, Micron, and Adobe. As you can see, I have this yellow and red. So this is telling me that the 1 month and 6 month trends are starting to turn. So 1 month trend is bearish, 6 month trend is neutral. As you can see, it's been there since late February. So this allows me to quickly identify this is the stock that's probably topped. So if you own this stock and you think that maybe this might be time to get out of that stock, if you don't mind closing out the trade, maybe it's time to start taking some profits. As you can see, the stock has had quite a bit of a run. So we actually had that same signal back in late or early February to let you know trends have started to turn bearish. And the fact that it came back a little bit and started to go back down again, this is telling me that as the stock continues to make lower highs every single time it sold off, came back, but it couldn't reach the prior highs and continued to move lower, this is confirmation that this stock is likely topped. So if you own the stock, might be time to get out, might be time to hedge it if you still want to continue owning the stock. Or for those of you that are looking for opportunity or more opportunistic, this might be a time to consider shorting it. So this is where I would consider a contrarian trade, because this is still a relatively strong stock. It's outperforming the overall market. It's got a technical score of 9, but that outperformance may be coming to an end, and that's what the trend indicator gives you that view on. So keep in mind that you have to use the two indicators in conjunction with each other in order to find these types of setups. Progressive, same thing, strong stock, bullish trends. So this is what I would consider a strong bullish trade. But as you can see, I don't even have to click on it. I can see that a score of 9 is here and it's green across the board. That's telling me this is a bullish stock with a strong score. Let's take a look at Boeing. Boeing is very similar to Michael Kors. It's got a technical score of 8, very strong stock overall, but the 1 month and 6 month trend has started to turn bearish. And it just did that a few days ago. So this is just the start of this potential top. As you can see, this stock has made a high here around 350, another high around 360, another high around 370, and then it could not make a higher high. The highest it could muster was around 355, and now it's starting to test this 330 support level. These are all classic topping formations or classic topping patterns, if you will. So these are the types of things that you can clearly identify. So if you own Boeing, might be time to take profits or start hedging your positions if you want to continue holding onto Boeing. And for those of you that are looking for opportunity, might be a good time to consider looking at some shorts on Boeing. Okay, and that's what our trend indicators helps you reliably get a gauge and a reading on, is what direction the stock might be headed in. Costco, same thing. The only thing I will say is what you typically want to look for on these turnaround trades is that you generally want to see either a new low or a new high. So on a Boeing, you want to see a new low being formed. So here, when it turned bearish, it did make a new low because the prior low was around 335, and here it made the 330. If it pushes any lower, that's a confirmation that the trend has, or the stock has topped. Same thing on Michael Kors, right? So when this stock turned bearish, it started to make a new low comparably, but it didn't quite match this February 9th low. So usually if you see a break below that February 9th low, that's an additional confirmation that you can look out for. That really helps you just have that confidence to pull the trigger, whether you're trying to get out of this stock or you're trying to enter a short position. You generally want to see a new confirmation of a new low or a new high in order to make these types of trades. So Costco, and the reason I said that is because Costco, as you can see, even though the trend, it's a strong stock, technical score of 7, the 1 month and 6 month trend turned neutral and bearish a few days ago. But as you can see, it hasn't quite made any new lows here. So it's not quite a confirmation to go short, but maybe if you own this stock, it might be time to start taking some profits. CF Industries, same thing. Technical score of 7, telling me this is a strong stock. 1 month and 6 month trends are bearish. As you can see, as it turned bearish, it was making new lows comparable to its prior lows when trends were bullish. So this is confirmation that, hey, this stock has probably come to an end in terms of continuing to move higher. It's time to either cut your losses or potentially even get into a short position. Now let's take a look at a few of the bullish turnarounds. So AvalonBay, this is a real estate stock, a REIT. As you can see, this stock has a technical score of 3, very weak stock, underperforming the market. As you see, the 6-month trend, this stock looks pretty ugly over the last few months as the S&P has been having a pretty strong few months since November. As you can see, that stock has underperformed that whole time. That's why it's got a score of 3. But the 1 month and 6 month trend is bullish. And that, again, is I don't even have to pull up the chart. I can just see on my watch list, this is the stock with the score of 3, but the trends are not red. It's actually yellow and green, telling me that trends have started to turn a little higher. As you can see, that stock just went higher just a couple of days ago, and it did that while making a new high relative to the last relative high, which was around 162. Now it's trading at 165. So these are all confirmations that, hey, this stock has maybe bottomed. So if you are looking as a long-term investor, this might be an opportunity to potentially get into the trade. If you are if you want to trade the options, now might be a time to take a look at a potential long. And that's really kind of when the trading tab here comes into play. I'll cover that in 1 second, actually, but I just want to go through a few more examples. Owens-Illinois, same thing. Score 4. As you can see, the trends have turned are no longer red. This allows me to quickly decipher that this is the stock that, as you can see, even though it's a weak stock, it's underperformed the market over the last few months. It's starting to turn around. And as it turned 1 month turned bullish, it started to make relatively new highs, because prior to that, the last high was around $22. Now it broke above that last high, came back to test it, and maybe starting to move a little higher forward. So this is, again, another confirmation that this stock is probably or may have bottomed and is starting to move higher. So this allows you to set up any watch list, and without even clicking on the individual stock to look at the chart or have to decipher the trend and what the trend is in relative strength, if you set up your watch list the way I do, where you sort it by the score, you can very quickly tell the ones with the strong stocks and the greens, those are the strong bullish stocks. The one in the bottom with the weak scores and the reds, those are the bearish stocks. And everything in between can be either one or the other of a bullish or bearish turnaround. So Michael Kors, as you can see, very high score, but the trends are no longer green. That's telling me this is a stock that may have topped. And conversely, if you're looking at a stock that has a very low score, but the trends are green and no longer red, that might be time that, this is a bullish turnaround. The stock may have bottomed. Okay, so I hope I've kind of given you guys quite a few examples here to show you kind of what the different patterns look like for both bullish, bearish, and the turnaround type stocks. So I'm happy to kind of go through just a few quick examples. So for example, if I'm looking at AvalonBay, I've noticed that this stock has made a new high. The trends have started to turn bullish. Now I want to be a little bit opportunistic. How do I take advantage of AvalonBay going higher? This is really where the trading tab comes into play. So when you click on I'm bullish, you'll be presented with 3 bullish strategies that tell you, hey, if the stock goes higher, here's how you can take advantage of it. So AvalonBay is trading at 165 right now. I see the next resistance levels around 172, around 173. So what this allows me to do is use the P&L simulator and say, what happens if AvalonBay goes to 173? By this April expiration that it's chosen for me. So here, if you bought the stock, you make a 4% return, right? So that's okay, not bad. However, you bought this call, you make 171% return. So this buying 100 shares of the stock costs you $16,000. Buying a call costs you $295. Buying the spread costs you $280. So 171% return for buying the call, 185% return if you bought the call spread. So that's if I'm correct, meaning the stock continues to move higher. But at the end of the day, no one has a crystal ball. We don't know where the stock may be. It might come right back down to this 157, 155 support level. It's very possible. So let's say what happens if that happens. Here, if I had bought the stock that cost me $16,000 to get in, I'm losing $1,000 if this trade doesn't work out the way I expected to and it falls back down to this 155 level that it was just at 2 weeks ago. If I had bought this call, I'd lose only $295. I limited my risk to a third of what it would cost if I had bought the stock, even though it cost me only $295. And lastly, if I bought this vertical, I only lose $280, so even less money than I'm risking. So that's really why this strategy here on the right gives you the highest options play score. I get a lot of questions about what's the options play score. The options play score just simply tells you how much potential reward are you getting for the same unit risk that you're taking. And the strategy on the right gives you the best risk to reward ratio, because if you're correct, you make the highest return. As you can see, if it goes to 173, I make the highest return here on the right, 185% return. And if I'm wrong, I actually lose the least amount of money on this spread. So whether I'm right or if I'm wrong, I come out better trading this strategy on the right compared to any of these two strategies. So that's why we prefer trading these call verticals when we send you our daily plays, because of this very exact scenario. Because when we expect the stock to move in our direction, we want to be able to get the highest return with the lowest amount of risk possible. And that's really what the options play score tells you. And that's how we use this tool to help you find call verticals and put verticals to trade when you have a directional view. So whether you're using our daily plays or you're coming up with your own ideas, so for example, on Michael Kors here, if let's say you agree that this stock is broken below that 62 support level, you think that it may continue going lower, then click on I'm bearish and you'll be presented with 3 bearish strategies. So to short the stock costs you around $6,100. To buy this put costs you $235. Buying this put vertical costs you $185. So let's take a look at what happens if the stock goes down to this 57.50 support level. So if it goes down to 57.50, 57.50, and this is where you can use these tools that are available to you to help you gauge which strategies to take for the views that you have. So here, if I shorted the stock, I make a 6.5% return. If I bought this put, I make a 91% return. If I bought this put vertical, I make 143% return. So significantly higher return on my money for trading this put vertical. And conversely, what happens if I'm wrong? What happens if it goes up to $65? Here, I lose $345 if I shorted the stock. I lose $235 if I bought the put, but I only lose $185 by putting that put vertical. So I risk less again and still have the highest return when I'm correct. That's, again, why we prefer trading these put verticals when we give you our directional views using our trade ideas. But you can use your own ideas. Use our tool to help you gauge what strategies to trade. And I do want to point out a few other examples because I believe when I was going through them, I saw a few of these. Let me see if I can find one here. One second. What was it on? Nope. Here. Or maybe, let's look at Macy's. So as you can see on Macy's here, so, this is a classic bull trade. It's a very strong stock, technical score of 9. The 1 month and 6 month trends are bullish. But as you can see, all the options play scores are pretty low. So, the stock's trading at 28 right now. Maybe you think it'll go up to that 31 level. So as you can see, if it goes up to that 31 level, here if I bought the stock cost me $2,800, buying a call cost me $209, buying this call vertical cost me $171. But notice that even if I'm right and this stock goes all the way up to that 31 level, I make a 7% return on the stock, but I only make a 19% return on the call. So not a huge boost, not the same type of boost that we were seeing before on some of the other trades where I make 5% on the shares and I'll make 90% on the call. Here I'm only going from 7% to 19%. And even on the vertical, I'm only going to 46%. That's why these trades have such low options play scores. It's telling you that for the amount of risk that you're taking, the reward doesn't look very attractive. So even if you're right, you're not making a ton of money. And conversely, if you're wrong, you're still losing that 100%. So that's why you're getting such a significantly lower options play score on Macy's here. This is just telling you that paying $209 for a 1 month at the money call is very, very expensive. And what that means is that even if you're right, you're just not going to make a lot of money. So there's nothing wrong with trading something with a low options play score, but it's important to understand what the difference is. And that really is crucial, because if you're correct, you might not make as much money as you would think. So that's why it's really important to use the options play score when you're selecting your strategies, and let it become your template to decide, is this a trade that I want to make using options or not? Sometimes you're just better off trading the stock. And I'll be perfectly honest, sometimes you do all this analysis, you have the perfect setup on the stock, especially when you're talking about small cap stocks. We come across a lot of examples where you're just better off trading the stock versus trading the option. And I want to make sure that you guys understand that the difference between that. So I'll go through one last example. Micron, as you can see, stock's trading at $60. So buying 100 shares costs you $6,000. Buying a call costs you $470. Buying this call vertical costs you $301. Notice the huge difference between buying an at-the-money call versus buying the vertical, and that's why you have a huge differential between the options play score on the call versus the call vertical. So the stock's trading at $60. What happens if you think it's going to go to 65? Here you make a 6% return on the stock. You actually lose money on this call, but you make a 50% return on the call vertical. Not super attractive, but the stock really needs to move a little further for that. So for example, if the stock goes to 67, here you make a 38% return. Here you make a dramatic 115% return. And that's why you have such a large difference between the options play score on the call versus the options play score on the call vertical. So I've covered a lot of things here today, everything on how to use the trend indicator and the technical score for directional view and gauge and giving you a directional edge. The only thing I want to leave you guys with is, number one, set up a watch list of all the stocks that you want to own. I recommend you to sort it by the score, because it allows you to quickly identify which are the strong stocks, which are the weak stocks. And it just helps you classify kind of which ones are at the extremes. And then, all the ones in the middle are the ones that you are kind of turnaround trades, so that you can quickly identify just by looking at it visually on your watch list. You don't even have to type, you don't even have to click on them in order to see it. Just looking at your watch list, I can tell which stocks are bullish, which stocks are weak, and which stocks are starting to turn around. And once you have a directional view, you can use the trading tab to help you gauge, how do I trade this? If I'm bullish or I'm bearish, how do I go through that? So with that, what I'm going to do is I'm going to just open this up for Q&A. Please, if you have any questions, type them into the chat window of the Q&A box, and I will try to answer them as quickly as possible. We don't have a lot of time, but I will try to get to all of your questions. Yes, the slides will be available. I'll be included in the webinar recording that I send out to everyone. Bart's asking, I don't have the same watch list as you do. I don't have the directional edge. So this is, you wouldn't have the same ones, because these are the ones that I created for myself. So if you want to create your own watch list, you just click on menu, click on new watch list. You can name it whatever you want, test 1, 2, 3, and then you can add your own stocks to it. So the directional edge was just a personal watch list that I created, and I highly recommend that you guys do the same thing. Dennis is asking, I've noticed that your options play data is not updated for today. And great point, Dennis. I just want to point out to everyone, we have a slight issue with our platform today where we haven't updated the prices. They will be updated around 5:30 when we run all the historical data. This is something that we know is a problem. We're fixing this as soon as we can. It's only a problem between after the market closes and about 5:30 when we update the newest prices. We are aware of this issue, and we will try to get it fixed out in the next couple of days. It doesn't affect it during the trading day or when the markets are opened. Gary's asking, Micron has 3 days until earnings. What's the options play view based on earnings? Great question. One of the great things about relative strength is that it's one of the only few reliable indicators that gives us a gauge for where a stock may be in terms of earnings. So because Micron has a technical score of 10, this gives us a high probability that the stock's actually going to beat earnings on earnings day, which here, as you can see, is 3 days from today. So one of the things that you can use with our P&L simulator is assuming what happens a few days after earnings, how each one of these strategies will perform. And that actually segues into a webinar that we'll be doing in early April for earnings season to show you guys what are some of the best practices for trading earnings and how you can limit your losses when you're trading earnings. So Micron reports earnings on March 22nd. So let's say what happens a few days after earning on March 26th, and the stock moves up. Let's say it beats earnings and goes up to $65. As you can see here, if Micron beats earnings on a few days after, you actually get the highest return here on the call. But the reason that it has the low options play score is because this option is very expensive because of the fact that earnings are coming up. Paying $470 for an at-the-money call that expires roughly 45 days from now is a lot to pay, and that's why you get that low options play score. But if you don't plan on holding that till earnings, if you don't plan on holding that to expiration and you just want to use this as an earnings play, then you can see how the stock will actually perform based on where you think the stock's going to go. So if you think it's going to beat earnings, and let's say you think it's going to go to 67, here it's still a pretty nice trade, but as you get a nice 84% return. But if you hold this all the way to expiration, as you can see, that time value really eats away at it. So even if it goes up to 67 by expiration, you're only getting a 38% return. So this is really a good way to learn about theta and how time decay affects the price of your option as it approaches expiration. Great question. Thanks, Gary, for that. Robert's asking, is a call vertical somewhat like a covered call in regards to exposure? You can sort of think of that. Basically, what you're doing is you're buying the at-the-money call. So here I'm buying the April 27, 65 and a half cover call for 60 and a half call for $4.70, but I'm at the same time selling the 70 call against it and bringing in $1.69. So you can think of that selling that $70 call as kind of like a cover call, which brings in some premium and helps offset the cost of buying that long call. So if you want to think of that way, it certainly is a creative way to think about it. But the goal here is to limit the cost of getting into that trade, but also limit the time decay on the trade. So that's why we really like trading those verticals. Great question. David's asking, best time of day to trade options. I don't necessarily know that there's a best time of day to trade options. A lot of options volume tends to be concentrated in the first 30 minutes and the last 30 minutes of the session. But that doesn't necessarily mean that that's the best time to trade. The best time to trade is when you have an idea and you feel that the option is priced accordingly. I don't necessarily know that there's best time of day to trade options. Is there a paper trade option for test strategies? Great question. So if, let's say, I want to trade this Micron trade, or if you're brand new to options trading and you're not sure what to trade, one of the things that we can do is you can click on the share button, and that will allow you to take a single strategy, and you can save this trade by clicking on copy to clipboard. Once you do that, this trade is saved in your profile, and you can follow this along. You can go to your profile. It's under your saved trades. As you can see, I can find all the saved trades that I have, and when I click on one, not only does it bring me back to the trade, but it also tracks the P&L of the trade. So for those of you that are paper trading and you're trying to learn about trading, use this as a tool because it will bring you to the trade and it will actually track the trade P&L. So you can use this to paper trade any strategy that you create using options play. Let's see, a few other questions here. Can you scan by options play score? So great question. We get this question a lot, is can you just scan for options play scores? And the answer is no, because the options play score itself is not enough reason to get into a trade. An options play score is simply just a risk to reward metric. It's not a thing to say, hey, I need to trade the strategy because it has a high options play score. Options play score is just telling you the risk to reward. You don't trade a trade just because it has good risk to reward. You trade a trade because you have a directional view first. What I mean by that is if I'm bearish on Micron, you see here, I get a high options play score. If I'm bullish on it, I also get a high options play score. Does that mean I should trade it just because of a high options play score? And the answer is no. You must first have a direction. You must first select, I'm bullish on a stock or I'm bearish on a stock, then use the options play score as your gauge, just to give you an idea as far as, am I getting a good reward for the risk that I'm taking? Okay, great question though. Caesar's asking, what will be the minimum options play score you would define as a good trade? So the options play score are color coded for you. Here, as you can see, the green is above 100, yellow is between 80 to 100, and red is below 80. So I generally tell users that as long as you have yellow or green, it's worthwhile taking a look at. If you have a red options play score, that's generally speaking a bad risk reward. You want to try to avoid them. But at the end of the day, just because it has a bad options play score doesn't mean that you can't trade it, because as you can see, if the stock goes to $72 by expiration, here you make 147% return. It's got a poor options play score, but you can still make money on something with a low options play score. So it's never a reason not to, you can't necessarily use the options play score to say, no, I'm not going to trade it, or yes, I'm going to trade it just based on the options play score. It's just one metric out of all the different things that you got to look at. But I generally avoid ones that are red. Susan's asking, do you offer guidance on exiting trades? So that's something we currently offer to our subscribers with a portfolio preview that we have. This will allow you to help you monitor your positions, but why don't you send me an email, Susan, afterwards. I'll talk to you about that, because there are some general rules of thumb that we have covered on previous webinars that I can send you to that give you an idea, that gives you an idea as far as how to exit your trades. Vincent's asking, is there a way to find high-scoring options play vertical? So I just covered that previously in the other Q&A. What would you say about Oracle that released earnings today? So unfortunately, I've been on this webinar since the market closed. I have not had a chance to see what Oracle did on earnings. I'm happy to look at that afterwards and give you my thoughts, but I simply don't know what has happened so far. William's asking, if I use your daily suggestions, how many can I expect to win based on history? So we've just sent out a blog post today. We've been compiling the list. So we have a 2-to-1 win ratio on our daily plays as of today that we calculated last night. What's your idea on Google and Facebook? So again, we're not here to give advice or tell you where it's headed. That's the point of this webinar, is the tools are available to you to make your own decisions. Use the trend and technical score to help you gauge, do you think Google and Facebook has kind of reached the top and started to reverse? The indicators certainly starting to show that. But that's what the indicators are here for, and we're not necessarily here to provide advice on telling you where we think it's going to go. David's asking, is there a way to tell using platform if leap option strategies make a good stock replacement strategy? Yeah, so you can use this for anything. So for example, Micron, instead of buying 100 shares for $6,000, you can click on modify for the call, change it to a leap. Let's take a look at January 2019. I generally recommend that if you're going to buy a leap, you buy something that's deep in the money, maybe a $45 or $50 leap. So as you can see here, if I compare buying 100 shares of the stock cost me $6,000, buying a $50 leap or a leap that's about $10 in the money cost me $1,600. So about 25% of the cost of buying 100 shares of the stock. And what you can do is you can buy this leap and sell cover calls against that leap, which will further reduce the cost of owning this deep in the money call. So that is certainly a strategy that you can deploy. As you can see, the options play score is not great on this, but that's really because it's reporting earnings in 3 days. So the leaps are fairly elevated in terms of pricing. If you come back after earnings, I bet you'll get a much better options play score. Jim's asking, where can we find your blog post? So optionsplay.com/dailyplay is where you can find all of our daily plays. Sorry. Looks like I have a few more questions here. Is there, Rams asking, is there a way to judge if you're getting a good price for an option, say theoretical price? So the best way is through the options play score. The options play score is telling you, is this option cheap or is it expensive? The more expensive it is, the lower the options play score. The cheaper the option, the higher the options play score. So that's really why we use the options play score as our gauge for that. But again, just because an option is cheap or expensive is not in itself a reason to trade it. It's simply one piece of the decision factor that you need to make when you're doing this. Any other questions? Please, if you have any other questions, type them into the chat window. Thank you, Vincent. I hope you guys have found this useful. Again, we've had a crazy day in the market. These are the types of times that you need reliable indicators so that you know, is this just a one-day sell-off or is this the start of a much larger trend? And that's what our trend indicators allow you to quickly decipher. Plug in the stocks that you own or the stocks that you want to own, and like I said, just by looking at the watch list, you don't even have to type. You don't even have to pull up the stock. You can quickly gauge which stocks are bullish, which stocks are bearish, and which stocks are kind of in between and starting to turn around so that you can quickly decipher, is this a stock I want to stay in or get into? If there's no other questions, again, I want to thank everyone for taking the time out here. Tom's asking, what is the cost? The cost is $50 a month or $500 a year for the platform. So you get 2 months free if you choose the annual subscription. I want to thank everyone. This is going to be a part of a whole series of webinars that we're doing. So in April, we're going to do 4 separate webinars. We'll send out a schedule for that in next week so that you guys can sign up ahead of time and so you can see kind of what webinars are coming. We're going to do ones on earnings in early April for those of you that like to try to trade earnings. We'll cover credit versus debit spreads for those of you that are trading spreads for your trading, and I'll do a couple of more introductory ones for those of you that are new to options. So trading your first option, and I'll also come back to using the directional trends that you have on our platform to help you gauge a trend. So we'll cover those 4 webinars again in April, including one on generating income, because I know that's the most popular topic for all of you. So we'll also do one in April on generating income. So please, those of you that have any questions, you can send us an email afterwards to info@optionsplay.com if you have any questions, and you will get an email with the recording in about 2 hours, I would say, once we process everything. So you'll have this recording that of everything that we went over today, plus the slides so that you can follow along as you're going along. I have looks like I have a couple of more questions. Regarding subscribers. So subscribers are just giving you access to the platform. So if you have a free trial, we give you full access to our platform. We don't leave anything out just because you're on a free trial. When you subscribe, you basically get access to everything that you continue to have access to. I have one other question saying, if I buy a Leap, what happens on earnings? Nothing happens, just that you own a call and you may have a large increase or decrease to the price of your a big increase or decrease to the value of your option based on whether they beat or miss on earnings. So nothing necessarily happens to the Leap. You just get a large price shock. That's about it. Thanks, Gary. If only I knew those numbers, I'd tell you. Any other questions? So the only thing with a Leap that you don't get as you do when you buy a stock is you get the dividends when you buy a stock. You don't get part of those dividends when you just own a Leap. So that is one fundamental difference. But when it costs you a quarter of the price and you can sell cover calls against it, you can make up on the yield by selling cover calls against the Leap versus just owning the stock. So Again, I want to thank everyone for taking the time out this afternoon. It's been great. I'm really happy to do these webinars and find that you guys find it useful. So like I said, the recording will go out in a couple of hours, and I hope to see you back in April when we come back and do ones on earnings. I hope everyone has a great afternoon.